Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. But before we resume, here's a piece of information. The Ministry of Heavy Industries has reinstated subsidies for electric wheelers under the PM e-Drive scheme. Now, the move comes as the annual subsidy allocation for electric three-wheelers for FY25 has been exhausted, and as a result, the government had temporarily stopped disbursing incentives for the electric three vehicles. Now, EV makers have also asked the ministry to hike the allocation under the PM scheme. Let's hear out a word from the Heavy Industries Minister H.D. Kumaraswamy on the same.
Financial extension they required, not subsidy, only for because actually in two-wheelers and three-wheelers, lot of sale is increased. Our PLI scheme will going to be ended 2026. 2 years this PLI scheme is there, but in three-wheelers, whatever expectation we have, that we already crossed 50,000 rupees subsidy what we are giving. All those some issues are there. For that actually they required some assistance. For that actually I told them to give some representation. Whatever best way we can still help them. We are extending actually in a big way, investing in a big way actually to get proper charging stations for the consumers.
So are you restoring subsidies for electric three-wheelers, sir? Are you restoring subsidies under PM scheme?
No, see, issues are there. I told them to bring it actually, whatever problem is there. I told them to give a representation.
Okay, that's the word coming in from the Heavy Industries Minister. But on that note, let's keep it going once again with all the big buzzers in today's trade. And now for this segment, joining us on the show is Lakshmikant Shukla, Technical Analyst, Institutional Research at ES Securities. Lakshmikant, thanks so much for joining us, and Ria's back with us from the research team. Lakshmikant, I'm going to come to you first. You've picked out Eicher Motors for us. If I pull up the charts, last 6 months the stock has not done much. It's up 7%. YTD also it's up roughly 25%. Give us a sense of where you are seeing the stock headed and what levels are you spotting on the charts.
Good afternoon to you all, and thanks for calling me on your show. So talking about Eicher Motors, this stock has rebounded after taking support from its key moving averages, and today this stock has formed bullish belt hold candlestick pattern. So in our sense, we could expect that this momentum could be extended further higher. So at the current levels, we have a good opportunity to take long in this Eicher Motor. So we could expect the upside target of 5,500 to 5,600 with the stop loss of around 4,700 on the downside.
All right. That is Eicher Motor on the charts. But Ria, coming to you then, GMR Airports operational update coming in for that. Tell us what are the updates and how's the stock performing?
Yes, so GMR Airports has come out with its monthly traffic data for the month of October 2024. Now, they've handled more than 10.7 million passengers across all airports, which is up 9.2% on a year-on-year basis, both on the international and the domestic front as well. Now, the passenger traffic has been transcending sustainably above 10 million passengers every month since December of 2023, and they've also handled the highest ever passengers traffic as well as ATMs in YTD FY25, crossing 74 million passengers and 0.48 million ATMs. They've also handled the highest ever cargo volumes of 0.65 million metric tons in YTD FY25, which is up 14.8% on a year-on-year basis, and more than 1 lakh metric tons of cargo volumes have been handled every month since September of 2024. Now, on the Mopa Airport, they've also completed the expansion works on this front, increasing the capacity or the passenger capacity from 4.4 million to approximately 7.7 million annually. So good numbers coming in for GMR Airports, which is why we're seeing the stock rising by around 4% right now.
Yeah, thanks for that. So the stock is up 4%, street cheering on the back of those numbers. But let's just focus and talk about another basket of stocks that's surging away in today's trade, and that's the PSU banks. Let's pull up the charts of you have IOB, Bank of India, UCO Bank, Punjab and Sindh Bank. These stocks are in focus because the Indian government is considering selling minority stakes in 4 state-run banks to comply with the public shareholding norms mandated by the country's market regulator. This is what a government source has told Reuters. The Finance Ministry is likely to seek approval of the Federal Cabinet in the coming months to dilute the stake in the likes of Central Bank, IOB, UCO Bank and Punjab and Sindh Bank, the sources said. The Indian government owns more than 93% in Central Bank of India, 96.4% in Indian Overseas Bank, 95.4% in UCO and 98.3% in Punjab and Sindh Bank as of September end. Now, the official said that the timing and the quantum of the sale would be decided based on the market conditions. So, this is a source-based story from a government source to Reuters, and on the back of that, the likes of these PSU banks, 4 out of them particularly, are up and away in today's trade.
All right, moving on from the PSU banking names to IHCL. Lakshmikant, you picked out IHCL for us on the charts with a couple of news flows coming in on IHCL. But on the charts, how does this company look like to you? It has given some very good gains in the last 1 month. Also, it has moved up 11%. Tell us, does the momentum continue from here on?
Strength in Indian hotel is very strong, and from last few days it has been moving with higher tops and higher bottom. Recently the stock has given consolidation breakout with the formation of bullish candle. Even we have seen the rise in its volume also. So due to which we are expecting that this upside momentum will continue in Indian hotel, and we are expecting the target of 790 to 810, and one can keep the stop loss around the levels of 730. So till it hold above the levels of 730, we could expect that the ongoing momentum will continue in Indian hotel toward the levels of 790 to 810.
Okay, so that's the technical view coming in on Indian Hotels. That stock is up roughly 3% as we speak. But Indian Hotels is also upbeat after the hospitality major has unveiled its Accelerate 2030 strategy. Its focus will be on driving top-line growth with 75% from traditional businesses and management fee, and 25% plus from new and reimagined businesses. My colleague Varun Dubey is joining us with all of those highlights. Varun, take it away and tell us exactly what this vision going ahead entails for the company.
Well, so Indian Hotels have actually unveiled their growth strategy for 2030, which they are calling at Accelerate 2030. Now, under this strategy, the company wants to expand the brandscape with new brands and new segments. The company is aiming to double its revenue to around 15,000 crores till 2030. Also, they are aiming to double their portfolio to more than 700 hotels. The ROCE would be more than 20%. Under this vision, the company would focus on driving the top line with 75% coming from the traditional business and management fees, and 25% plus coming from the new and reimagined business. Also, the new business, they are expecting it to deliver a growth of more than 30% CAGR till 2030. The management fees is expected to reach around 1,000 crores by 2030. Also, the capital outlay in the next 5 years would be around 5,000 crores, and the dividend policy would be intact. That is 20 to 40% of the PAT would go to the shareholders. The company says that it would generate industry-leading margins and return on investments, and also the company would be cash positive till 2030. So it is a good vision that has been kept forward by the company, which would take the company to new highs.
All right, Varun, thank you so much for joining us with that information. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you some more stocks that are buzzing away in trade. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or on the back of technical charts. Let's resume then. NTPC is a stock that is in focus today. There's a few coming in from Bernstein. Now, they feel that NTPC has the potential to become the largest renewable company in India if NTPC targets a 40 gigawatt capacity by FY30. It may require an additional 150 billion rupees in funding beyond the rupees 100 billion raised through the IPO. Now, the NTPC Green valuation implies a 14x FY26 EV EBITDA, but NTPC is still trading at par with a global utility peer on a 12-month forward basis. NTPC is currently trading at par with the global average of 12-month forward, the PE ratio, the 10,000 crore rupees mega IPO also that has opened up for NTPC's renewable energy arm, NTPC Green today. It is up for subscription. It is from 19th November to 22nd of November. The IPO is the largest by a PSU firm in the renewable energy space that aims to capitalize India's ambitious Clean Energy Goals. The IPO comprises of entirely fresh issue of 92 crore equity shares with no offer for sale component. And on 18th of November, NTPC has already raised 3,960 crores via anchor book. So that's the news coming in on NTPC Green IPO as well. On the back of that, the stock is up a percent.
Absolutely. And speaking of the IPO, we caught up with the management of NTPC Green as well, and the expansion to 60 gigawatt capacities on the cards for NTPC Green Energy, while solar energy will be a key lever for growth. This is according to Gurdeep Singh, CMD, and Jay Kumar Srinivasan, Director Finance of NTPC Limited and NTPC Green Energy. Listen into what they had to say about the company's expansion plans going ahead.
We have a broad target of 60 gigawatt which we have set out to be completed by financial year 32. But on a more immediate basis, we have a capacity which is operational 3.32, and then we have a 13 gigawatt which is under construction. It is either awarded or contracted and under construction. And beyond that, there is another 9 to 9.15 gigawatt which is in the pipeline. So we have a clear visibility of around 26 gigawatt which is there up to the financial year 18, and going beyond that we will complete it, take it forward up to 60 gigawatt by financial year 32. So we are marching quite comfortably in that, and probably we may end up doing it a bit earlier than financial year 32.
In case of the solar and wind, what we believe is that solar is going to be clear winner, and our plan is to go for about 90% in the solar and 10% in the wind, because the solar has a clear visibility, and with the storage this will have the far better grid kind of integration, because solar is predictive, and with the storage we can also meet the requirement of the peak hours, which is off solar hours after the sunset, whereas the wind is available across the country in the different parts of the country only for few months.
All right, moving on from that, Lakshmikant, I'll come to you. Tech Mahindra is the name that you've picked out for us. Tell us what do you see on the charts for this counter? If you look at the counter in the last 6 months, it's given 30% returns. Last month, it has been pretty flattish in the last 1 month. So from here on, how do you see the stock moving?
Severe downfall of Nifty, where Nifty has corrected around 10% from its lifetime high. Nifty IT was one of the sector which was resilient, and even if we compare the stocks of IT, I think Tech Mahindra is one of the stock which can also outperform the Nifty IT, because this stock has clearly trading in the bullish trend, and day before yesterday it has formed hammer kind of pattern. Today it has come with the formation of bullish bell-toed candlestick pattern. It has also surpassed its previous swing high of 1700. So I am expecting cup and handle breakout in Tech Mahindra, which could push it higher toward the levels of 1830 to 1850 zone, with the stop loss of around 1640 on the downside.
Okay, so that's the view coming in on Tech Mahindra. But Ria, you've picked out a bunch of life insurance stocks. Tell us what's made you pick out these basket of stocks. So have they've made it to your radar, and what's the news flow behind this?
Well, absolutely. So UBS has come out with a note on life insurance companies today, saying that they believe that life insurance companies' growth has been largely driven by the ULIP segment, and margins may remain stretched on the back of a higher share of ULIPs and changes in the non-linked surrender payouts as well. Now, they do expect these companies to move to new commission payout structures going ahead, linked with persistency to minimize the impact of the new guidelines, and this will limit the net impact on value of new businesses as well on the VNB margins. And they also expect a moderation on the retail protection growth to continue for most firms going ahead. And they've also said that the competitive intensity is declining, as companies may not be able to cross subsidize with other products going forward. Now, on the back of this, we are seeing a lot of pressure on life insurance companies. LIC is the only one that is managing to hold on to some gains, but others, the likes of SBI Life, HDFC Life, and ICICI Prudential Life are all trading with cuts of 2 to 3% as we speak.
All right, with that, we've come to an end of this show. Ria, Lakshmikant, and Osho, who joined us in the first segment, thank you so much for taking the time out and joining us. With that, it's curtains down this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Closing trades is coming up next.